Waste Management Inc. company WM, which is also its ticker symbol, is a waste management and environmental services company. Founded in 1968, the company is headquartered in Houston, Texas. The company serves nearly 21 million residential, industrial, municipal and commercial customers in the United States, Canada and Puerto Rico. If we zoom out, we can see it traded sideways for a couple of decades, then the upward momentum started in 2013 before the sustained stratospheric rise began. The past 12 months have seen a high of $175.98 and a low of $148.31. The yield is currently 1.72%. If we have a look at the dividend history, looking at historical data, dividends have been paid quarterly since September 1998. Year-on-year increases and no cuts definitely keep investors happy. They also have a little statement here at the top, which I like. Waste Management is committed to growing shareholder returns. We have a strong track record for dividend growth, consistently increasing the dividend rate for more than 15 years with a compound annual growth rate of about 6% over the last 5 years. Statements like this instill confidence. Looking at the dividend criteria on Simply Wall Street, it checks 5 of the 6 boxes. The only one that it falls short on is the yield, which is low compared to the top 25% dividend payers in the US. This doesn't bother me at all. All the important metrics are ticked. Dividend stable over the last 10 years. They have continually increased, has a low payout ratio of 48%, and the company can easily cover the dividends with its cash flow. Having a look at the compound annual growth rate, the total return CAGR for Waste Management stock is 8.92% over the past 12 months, 16.38% over the past 3 years, and 14.88% over 5 years. Total return includes any dividends being reinvested. Let's have a quick look how it's performed against the S&P. Over the last 10 years, wow, if you'd invested $10,000, you would have a total return of 379.85%, with a massive ending value of investment of $47,986.37, beating the S&P by quite a margin as well. The S&P still gives you a decent return, but WM has been an incredible investment. If we go back 20 years, it's even better. Almost hard to believe, a total return of 1,082.91%, giving you a whopping $118,319.94, almost double the return of the S&P. Out of all the comparisons in previous videos so far, this has been the best return by quite some margin. I congratulate anyone who bought and drip-fed this investment. Let's have a look at the financials. WM market cap is $66.11 billion. Revenue has seen a continued increase from 2015 onwards, from $15.22 billion in 2022 to $19.7 billion last year. EBITDA is looking good as well. Another 3 years of consistent growth from $4.09 billion in 2015 to $5.4 billion in 2022. Free cash flow, a bit of a drop-off. 2021 was their best year, but still strong at $1.95 billion. Net income aligns with the last 3 years of consistent growth from $1.5 billion in 2020 to $2.24 billion last year. EPS again, 3 years of growth, having its best year so far in 2022 with $5.39. Debt is on the high side, something to monitor. I will talk about what they're investing in a moment. Dividends we've talked about, continued increases, always nice to see the upward trajectory. Other good points, shares outstanding, moving in a nice sliding downward direction, which is what we want to see. Return on capital employed is consistent. The last 3 years have moved with a growth. Expenses moving up, something to also monitor given the debt. What needs to be taken into account is that WM have been and will be continually investing in growing their recycling and renewable energy solutions with a $2.215 billion commitment. The world is much more environmentally conscious and reduced emission targets have to be met. There is always going to be a need for waste management, and this sector has seen continued increase in demand and growth. So look at the earnings. Q2 earnings were solid, but did not meet Wall Street's expectations. EPS and revenue were both missed, not by a huge amount. This has set a revised outlook for the year with lower guidance. Despite this lower guidance, Wall Street is very bullish, with analysts forecasting strong price growth. CNN Business have an average 12-month price target of $177.76, 8.8% upside from where we are today based on 18 analysts. Tip ranks have an average price target of $177.55, 8.65% upside where we are today based on 10, and Zacks have an average buy of $178.27, 3.8% upside where we are today based on 15. A unanimous expectation of continued progress in price growth. An average price target between CNN Business, Tip Ranks and Zacks is $177.86. If we have a look at value investing, and a look at what the intrinsic value based on the discount and cash flow was, it has a fair price of $201.57, which sees 24% upside. And the dividend discount model shows a downside of 32% with a fair price of $110.49. And trading multiples down 12.9% with a fair price of $141.52. If we take the average of the analyst expectation and the value investing models, that would give us $157.86 with a 10% margin of safety, would be $142.07. That is lower than its 52-week low of $148.31. Saying the stock market has been turbulent this last 12 months is an understatement, so who knows what is in store next? Personally, I think $150 is where I might start a new position, and then hopefully average down over time. As usual, thanks for watching. If you've enjoyed this video, please like and subscribe.